And similar provisions, so if 1 lakh is the closing stock that I have, and if 10%, let us assume, is the duty, so 10,000 rupees is my credit that is available to me, which I will carry forward in my electronic credit ledger. And similar provisions are also available under SGST for the VAT for the goods that has suffered VAT. So the duty input of excise of VAT, both will be available to be carried forward. But there are certain conditions, and you see 2 conditions have got added in the revised one that got released today. So such inputs are to be used for making taxable supply. So whatever inputs I have should be for taxable supply. So that is correct, because my goods have now become taxable, so that is okay. The benefit of such, see, this is a new addition, and this is very important, I think, because the government has for the first time thought about the consumers. You see, till now the government was thinking about itself, the state government was thinking about itself, the business community, they were thinking about themselves. No one was thinking about the consumers. That if today if today any goods is suffering, say, 25% rate of duty, and in GST it comes under, say, 18%, there is a saving of 7% tax. But will that 7% be passed on to the consumer? No one wanted to speak about that. You see, I will tell you, in Malaysia, we were told that when GST got implemented, there is a specific act which says that whatever is the benefit that accrues to the manufacturer because of reduction in duty, because of GST, has to be passed on to the consumer. You cannot take that as your profit. And I was reading in the media report that central government is, I think, thinking of making one authority which will do this assessment in India. Now that has got incorporated in the second bullet. The benefit of such credit is passed on to the recipient by way of reduced prices. So whatever input benefit I take because of GST should be passed on to the recipient by way of reduced prices. This, I think, is a very important change that has come. The third one is the taxable person was eligible for input tax credit under the earlier law, but for his not being liable for registration, the goods being exempt. So that was one condition. The taxable person is eligible for ITC and the GST. The duty paid documents are available with the taxable person.
So what are those documents? Because the second is the one that documents are not older than 12 months.
So basically inputs that are available.
If your stock is older than 12 months, then?
So then it is not available.
Not available.
Not available. That is what the provision says. And the duty paying documents should be available with the taxable person. And the last point that has got added is that the supplier of services is not eligible for any abatement. So we are not still sure which services will come as abatement or not, because that list has not been released. But if someone is taking inputs of the stock that is available or for the services, he should not be entitled for any abatement, because you can't take the full benefit of input and then give out your taxable supply at an abated rate. That is the concept. But one more addition, I don't know if I covered it over here. Yeah, I think I have covered. There is one, no, it is not mentioned here. Like I mentioned in the previous slide, that the documents, that the duty paid documents are available with the taxable person. You see, let me take an example, that if today I am a trader and I have, or today I am a person who is doing trading of goods, and I am buying it not from the manufacturer or the first stage dealer, but from some other trader. So the excise part of it will not be reflected in the invoice that I buy, but the item has suffered excise, and now tomorrow it is taxable. So I should be able to take the benefit. So one new provision has got added, that in case of trading, I maybe read it out, and if the duty paid documents are not available, then such documents that may be prescribed by the government will be eligible for taking the input. So that provision has come. That I think I missed in this slide. Oh, sorry. No, this is mentioned here. In case of registered taxable person other than the manufacturer or provider of service, if taxable invoice is not available, ITC shall be available on such conditions as may be prescribed. So this point, sorry, it is mentioned here. So this has got added just today. This was not there earlier. So this was one point that we had continuously raised with the authorities, that what happens to my duties on which I don't have tax, duty paid documents. So this has got covered. We will have to see what are the conditions that are prescribed, but at least it has got covered. And the amount of ITC to be calculated as may be prescribed. So maybe they will say some specific rate or some calculation method will be prescribed. We will have to see what is prescribed. If you remember the first slide I mentioned, lots of documents we will have to refer. So some more documents will come and we will see what is prescribed. This is one new that has got added, section 171, credit of eligible duties in respect of input or input services during transit. You see, this was a continuous question we used to ask whenever we used to interact with the government departments, that if I say do a supply on say 25th of March and the goods are received on say 5th of April. Now I have raised an invoice, but the GST law says that whatever goods I have in my say possession, I will get credit only of that. So what happens to that goods which are there in transit? So this new section has got added today. Luckily, you see, that is the reason I am saying that the government has read the representations. So this representation had gone from various Chamber of Commerce's. You see, I will tell you, we had one very senior professional in our so-called informal group of faculties and indirect tax professionals, and he is also a very senior officer in an MNC. So we asked him that, sir, what will you do? As a company person you tell us, not as a professional, not as a professional of IGP, but as a company person you tell us that how will you tackle this situation? So he told me, Tarun, what I will do is that from 15th March, we will not make any supplies. He said we will not do any supply from 15th of March. So this problem will not be there at all. But you see, all of us understand that we can't stop our business because of such things. Although because of demonetization, some businesses have got stopped. But at least in GST, because we have a transitional provision, in demonetization we did not have transitional provisions. But here, because we have transitional provision, we can at least plan our things in such a manner that we get least affected. And this is one welcome move. So it's a big, some 7-8 lines. It basically says that one will be entitled to take credit of eligible duties received on or after the appointed date, but the duty or tax in respect of which has been paid before the appointed date, subject to the condition that the invoice or any other duty paid document was recorded in the books of such person within a period of 30 days. So basically, if the movement of goods started say from on 15th of March or 25th of March, and it has got received in the premises of the buyer on say 5th of April or 10th of April, which is within 30 days of the appointed date. So goods which started before 31st March but have reached by 30th of April will be eligible for the inputs. That is what is coming out, and provided that the aforesaid period of 30 days may on sufficient cause be extended. This is a very normal clause, saving clause for all of us, that in case it is not, then the government may increase to from 30 days to maybe another 30 days. But this is a very welcome move, I think, from the government, that goods in transit has been taken care of. And the registered taxable person shall furnish a statement in such manner as may be prescribed in respect of credit that has been taken. So this is a procedural clause. Now this is a clause, section 146. In the new act it is 172. Credit of eligible duties and taxes in respect of inputs held in stock switching over from composition scheme. So today I am under composition scheme and now I am switching over to the taxable regime under GST. So let us see. A registered taxable person who was under a composition scheme, either a fixed rate or fixed amount was being paid by him, shall be entitled to take credit of eligible duties and taxes in respect of inputs held by him in stock or finished goods held in stock on the appointed date, and similar provisions are there in the VAT regime. So basically, I was discussing, when I was sitting there, I was discussing with one of the participants that what happens to that. So this is the answer to your query, that if I am under a composition scheme today, which means I am paying tax either on a specific rate or a fixed amount is being paid by me, but under GST I get registration has been taken, and now I am over and above that 50 lakh say limit of composition scheme, so I have to pay tax. So whatever input is available to me in my stock as semi-finished goods, finished goods or in process, I have to calculate and I can take the credit. And similarly for VAT also, in the SGST laws, this model GST law has this provision.
Composition scheme in CGST require the input to be taken. Can we take it? Composition scheme in GST. Can they take the input of the input?
No, so here it is, I was in a composition scheme
I am not.
and now I am going out of the composition scheme. So because my supplies will now become taxable, my input should also be, I should be entitled to get the input. But again there are conditions. Such inputs are to be used for making taxable supply, which is obvious. The taxable person is not availing composition scheme under this law. So this is the answer, sir, to your question, that I should not avail composition scheme now under the new law. The taxable person was eligible for input tax under the earlier law. So this is your, sir, this is your point, that you should be entitled to take input, ITC, under earlier law, but just because you are in the composition scheme, you did not take that benefit. So all eligible inputs that you are taking now should also be eligible in the earlier law. That balance one has to take. That has to be done. That I was eligible under earlier law and now I am now taking it now, but because I was under composition, I did not take the benefit over there. And so 4 bullet is taxable person is eligible for ITC under GST. Then again same thing, duty paid documents are available with the taxable person and it should not be older than 12 months. And the amount of ITC to be calculated may be as prescribed. Then next is section 148. New section 173, exempted goods returned to the place of business on or after the appointed date. What does it mean? It means that I have some exempted goods. My goods were exempted, so I made a supply before the appointed date. Say I did a supply on 15th of March of an exempted good, but the purchaser did not take delivery or he has rejected, and that has come back to my place of business on 1st of April or after 1st of April. So what do I do? So the provision says that where exempted goods under earlier law, but the clearance should have been done in the last 6 months only. You see, the like demonetization, everywhere it is, they are binding it, here also it is getting bound. So the time is very important. Only supplies, exempted supplies that were done in the last 6 months are returned to a place of business within 6 months. So 6 months here, 6 months there. From the appointed date, no GST shall be payable on such return of goods. So if I have made a exempted supply on, say, after 1st of October 2016 and it is received by 30th of September 2017, there is no tax. But if I make a supply before 1st October and it is returned within the appointed, after the appointed date, it is taxable. And so there are only something that is got cleared within 6 months and returned after 6 months, it is exempted. In all other cases, the person returning has to pay GST. So the person who is returning me the goods has to pay GST. This is a new addition in the last bullet. You will see they have been done. So no tax shall be payable if the goods are returned by a person who is not registered under the Act. Which basically means that, let us assume I have made an exempted supply to a person who is also exempted. I have made an exempted supply to a person who is also exempted. Now he doesn't return with the goods within 6 months. So it becomes taxable. Now who will pay the tax? So earlier one said that the person who is returning shall pay the tax. But how can the person who is returning pay the tax? Because he is not registered. If he is exempted, why will he get registered? So there is a dispute. So this has been taken care of in the revised one. It says that no tax shall be payable if the goods are returned by a person who is not registered. So this has been taken care of. So basically I am trying to explain this in this way that so if 1st April is the appointed date, so 6 months back and 6 months forward, if goods are supplied before 6 months and are received after 6 months, it is taxable. If goods are supplied before 6 months but are received within 6 months, still it is taxable. If goods are supplied before 6 months but are received after the period of 6 months, it becomes taxable. So only goods, exempted goods supplied before 6 months and received within 6 months is not taxable. Is this clear? So this has to be understood from the date of appointed date that all exempted supplies before 6 months, received within 6 months, no tax. All other is taxable. So you see, when we will come at the end of the presentation to a checklist form of doing things and doing the preparedness for assessees who have exempted goods, they have to be very careful that, if there is any return that comes, it should come within 6 months. Otherwise, if it comes after 6 months, then it becomes taxable. So this is very, maybe your consumer or your customer doesn't know these provisions because he is not impacted. But if he returns you after 6 months, you are impacted. So you have to sensitize your customer by saying that if you want to return, please return by this date. Otherwise, this is the implication on this return. This has to be communicated to your customer. Then duty paid goods return to the place of business on or after the appointed date. Section 149, new section 174. So it says where duty paid goods under the earlier law, same thing over here, clearance should be within 6 months, are returned to any place of business within 6 months from the appointed date, no GST shall be payable on such return of goods in case of unregistered person. Same clause. In case of registered taxable person returning shall have to pay the GST. So let us see this. Again, before 6 months, after received after 6 months, taxable. If it is before 6 months but received within 6 months, but still it becomes taxable. If it is within 6 months but cleared within in the last 6 months but received after 6 months of the appointed date, it becomes taxable. So only 6 months cleared before 6 months and received within 6 months by an unregistered person, it becomes not taxable. But you see, if it, in case of registered taxable person, the person returning shall have to pay the GST and then he can take an input. That is the concept over here. Job work. You see, this was very important because as of now, Section 150 earlier law in Section 150, 151 and 152 of the earlier model GST law, and in the new one 175, 176, 177, removal of inputs for job work, semi-finished goods or finished goods. This was something that was very contentious in the old model GST law, that what happens if the supply is received after 6 months, because in the earlier model GST law, the job worker would have to pay the GST. Now in the current scenario, no job worker is generally registered. So this was something that was a point that we had raised in the representations, and this has got some benefit over here. So it basically says that when inputs for job work, semi-finished goods or finished goods are cleared under earlier law and are returned to any place of business within 6 months from appointed date, no GST shall be payable on such return. Same concept. It has to be, so it has been given to a job worker. Here you see, for giving there is no limit of time. In the earlier cases we saw that this has to be given within 6 months and received after 6 months, the appointed date, after the 6 months with the appointed date. But here, when I give is not the criteria, but when I receive, it has to be within 6 months. So no GST shall be payable if the return is within 6 months. In other cases, the person returning shall have to pay GST, and the person receiving the goods within a period of 6 months shall be entitled to the credit of duty paid at the time of removal. So you see, people who deal with job workers and all will be able to understand this very easily, because yeah, it's okay. I'll have it after. So in other cases, person returning shall have to pay GST. The person receiving the goods within a period of 6 months shall be entitled to a credit. So whatever, if it is after 6 months and the job worker is charging GST, so then the person who is receiving will be able to take a credit of the GST charged by the job worker. But you see, here again, I will tell you, that problem stays. In the revised one, I will have to see whether this has been taken care of or not. But the job worker, if he doesn't give back the goods within 6 months, he will have to pay GST. Because the second bullet is what it says. In other case, person returning shall have to pay GST. But if he is not registered, then he will have to take registration. This was one point that, as I told you, had raised. I am not sure whether it was not covered in the revised one, but this is one point that will be a sticking point for job workers at least. Generally, you see, in my clients, I have seen that if they give anything on job work, it comes back within 6 months, because that has been the current practice also. It is not that it is new. So this current practice goes on, but this is just a safeguard clause for the government that if it doesn't come back within 6 months, then the job worker shall have to get registered and pay GST.
Is there any time limit? Like what time should we get registered if he has already got it for term?
So you see, in such cases what happens is that if he is not able to give back the goods within 6 months, then he becomes a taxable an assessee, because he has to now charge GST. and if he is, so he will have to get registered, and he will have to raise a taxable, because it will become a supply. He will have to raise a taxable invoice,
But
and
there
then
must be some law guiding the time factor because he will be never interested.
yeah. So he will have to take registration within the time that is specified. That will have to take. So if we understand it from this diagram, so when I give is not important, but it has to be received. It has to be received within 6 months or an extended time of another 2 months. So if it is received within the extended time, then there is no tax, otherwise there is tax. So 6 plus 2, 8 months. If still the goods don't come back, then it becomes taxable.
What is capital goods are being returned by the government? The goods which are being returned as capital goods, then is there any difference?
Same concept. Same concept. Next is about issue of supplementary invoice. So today I have sold my goods at 100 rupees, which was a rate to be finalized later, and I now finalize the rate at say 110. So I raise a supplementary invoice or a debit note on my customer. Similarly, the rate that was at which I made the invoice that time was 100 rupees, but now it has got finalized and the price is reduced to 90 rupees. So I issue a supplementary invoice or a credit note to my customer. So what happens in that case? So it says that any price revision happens, if it happens for an earlier supply or an earlier sale, the supplementary invoice, debit note or credit note for the price revision in terms of the contract entered prior to the appointed date may be issued within 30 days from such price revision. So whenever the price revision happens, I have to raise the supplementary invoice or the debit note or the credit note within 30 days. And the invoice or the debit note or the credit note shall be deemed to have been issued under GST as an outward supply. So this excess or the deficit invoice that I raise is taken as my supply under GST. So whatever I have to pay, so if my price has got revised from 100 to 110 and whatever GST is payable has to be payable in the month in which I have raised the supplementary invoice, or if I have to receive from my customer, then I am entitled to that receipt provided my customer has reversed the input that he has already taken. So if my customer has taken input on the invoice of rupees 100 that I had raised, and today if it is revised to 90 rupees, then I am entitled to take the credit subject to his reversing it in his return. So that is very important. But anyways, I am entitled, if the duty liability increases or decreases, that adjustment can be done very easily. Section 154, a new section 179, pending refund claims. If I have a pending refund claim, say today, I have filed a refund claim with the department and it is pending on the appointed date, then what happens to that? So every claim of refund for any duty or tax and interest, if any paid, shall be disposed of in accordance with the provisions of the earlier law, and any amount eventually accruing to the assessee shall be paid in cash. So whatever refund claim I have filed, and it will be dealt with as per the earlier law and will be paid to me in cash, provided that where any claim for refund is fully or partly rejected, the amount so rejected shall lapse. Now here there is a problem. You see, under today's provision, if my refund claim gets rejected, I can appeal. I can go in appeal and I can fight it as per the normal provisions of the specific earlier law. But under the GST, proposed GST law, it says that the amount so rejected shall lapse. So this was the wording also in the model GST law, earlier one. We had raised representations, we had issued in concerns on this, that why should it lapse? It should, if it is being dealt with as per the earlier law, it should be dealt, I should get the right to appeal, which is there in the earlier law. So why are you putting this clause over here? But somehow I think this has not been addressed. We will have to see in the revised one if it has got addressed. It did not come to my notice. So this provision stands. I was discussing this with a very senior advocate, that in such cases what happens. So his view was that, you see, my right to appeal in a high court as a writ petition always stays. So if here I am not getting the chance to go in appeal, I can always go to the High Court and say that this has got rejected, but this is my case, so can you take it? So the right stays, but in the earlier law this was there as an appeal provision, here it is not. Okay, this is a new one that has got added, section 180. Refund claims filed for after the appointed date. So in the earlier one we discussed refund claims filed before the appointed date. And now this is refund claims of earlier law filed after the appointed date. Because say in an export case, I can file my refund within 1 year of the date of export. So what happens to refund claims that I file after the appointed date? So this has got added. So it says that it shall get disposed of in accordance with the provisions of earlier law, and saying that if it is rejected, the amount shall get elapsed. But here also the same discussion that I just had will qualify. And here it says, provided further, that no refund claim shall be allowed of any amount of payment credit where the balance of the amount has been carried forward. So basically it says that if you have shown a Senvet credit as a closing balance and it has got carried forward as an opening balance under GST, now you can't come and say that you please give me my 100 rupees refund which I had shown in the closing balance. Because they say that if you have shown it as a closing balance, it has got reflected in the opening balance. So that the new law will take care, you will not get a refund. This is another one that has got added, section 181 new. Refund claims filed. Oh, sorry. I did not notice. Now, how much time do I have? 15 minutes. Okay, I'll try to do it within 15 minutes. Yeah, so new clause 181 has got added. Refund claims filed after the appointed date for payment received or tax deposited before the appointed date. So here same refund thing is there, that if it is being filed after the appointed date for payments received or tax deposited before the appointed date for services that I have not provided, so it shall be dealt with in the earlier law. And whatever accrues shall be paid in cash. Section 155 of the old law, section 182 of the new one, claim of Senvet. Sorry. Any appeal or revision, review or reference relating to a claim of Senvet input shall be disposed of under the provision of the current law applicable, and any credit is eligible, the same shall be refunded in cash to the assessee, and if not eligible, to be recovered as arrear of tax. So basically it means that, you see, whatever is my closing balance of the return shall be taken as opening balance under GST. Now whatever increase or decrease happens will be dealt with in cash. So if my Senvet increases because of some reason, I will get refund. If my Senvet decreases, I have to pay. Closing balance Because so if you come, I will come back to my initial slide when I said that I should be prepared to file my return, correct return in time. Because whatever is the closing balance will sacrosanctly become my opening balance. And then I have to do dealings in cash. Section 156, finalization of proceedings relating to output duty. Same concept. If there is an appeal, revision, review or reference of any output duty liability initiated before the appointed date, the same shall be dealt with in accordance with the provisions of the earlier law. The last board is very important. You see, if today I have a case, say of reverse charge, there is a show cause on me to pay some amount as which I am liable to pay under reverse charge mechanism. If I pay it today, immediately I can take an input of that in this period. But if this is decided after the appointed date, then the amount so recovered shall not be admissible as an input tax credit under this act. So you get the difference. If today I am having a show cause and if I pay now, I can take the input. But if I am having a show cause and a reverse charge, and if I pay after the appointed date, I am not entitled to take input credit. So in the first slide when I said look at all your litigations, if today one has a show cause under reverse charge and he assesses that the chances of winning are less, it is better to pay now with interest and penalty and take the credit. Otherwise, if you lose this case after the appointed date, you will not be able to take the input. So that assessment one has to take for this clause. Section 157, treatment of the amount recovered or refunded in pursuance of assessment or adjudication. Same, you see, if any treatment, if any liability increases or decreases, before or after the appointed date, the same shall not be admissible as input tax credit under this act, and if there is a refund, it shall be refunded to him in cash. Division of return, we all have powers to revise a last return, but same concept is here, that if the return is revised and my closing balance increases or decreases, the opening balance doesn't change. The dealings are to be done in cash. So if it is refunded, it shall be refunded to me in cash. But if I have to pay, I can't. It is not admissible as input tax credit. You see, so when I am filing my return of 31st March, it has to be filed in a manner that my liability doesn't increase. Because then if it increases, I pay, but it is not available to me as an input. That is very important. So the government has said that whatever is your closing balance, take it as opening balance, but changes in cash, no benefit. Long-term contracts, like I said, government contracts especially, which are generally all-inclusive contracts. So, goods or services supplied on or after the appointed date in pursuance of a contract entered into prior to the appointed date shall be liable to be taxed under the provisions of this Act. So, I am making a supply in pursuance of a contract entered earlier but supplied now after GST. I can't say no, that contract was, the supply is based on that contract which has 15% tax, so please I will charge only 15%. No. You are making a supply now, 18% tax if that is the tax that is finalized. Similarly, for progressive or periodical supply of goods, section 160, the new one 187, it says, notwithstanding anything contained in section 12, no tax shall be payable on the supply of goods or services made on or after the appointed date if the consideration for the said supply has been received prior to the appointed date and duty has been paid. So if I have received consideration, so let us take an example that I am supposed to make a supply or to provide a service after 1st of April, but the client has already paid me the advance, full advance. It is like when we make a booking on, say, a travel portal or something where we have to pay the full amount. So the company has taken full consideration, taken tax also, and deposited with the government on 31st March, but service is given after 1st of April. In that case, no tax is payable, no extra tax is payable basically. Section 188, new edition, taxability of supply of services in certain cases. So it's basically with respect to point of taxation, the concept I have discussed. Same is taxability of supply of goods in certain cases. Okay, this is a new one that has got added. Credit distribution of service tax by ISD, input service distributor. So he can distribute, so whatever credit is available with an input service distributor, he has to get registered and then he can distribute the input that he has. Sorry, this has got added. The last one was there in the old law. This has got added because this was one point that we had also raised, that you see today in case of service tax, we have the concept of centralized registration. So if I am an SSC having offices say in 10 states, now I have a consolidated SENVAT input that I have in my return. But now under say GST, because my operations are in 10 states, I have to take 10 registrations state-wise. So how do I distribute my ITC that is available as closing balance across my 10 new registrations? So if you see the last bullet, it says such credit may be transferred to any of the registered taxable person having the same PAN. My PAN is the same. I was only registered once under centralized scheme in the current law. Now I am registered in 10 states but in the same PAN for which the centralized registration was obtained under the earlier law. So I can transfer the credit, the mechanism will be prescribed as may be prescribed, but this enabling clause has come that today I am under centralized registration, tomorrow I get into 10 registrations in 10 states, I can transfer that credit to my 10 registrations in the same PAN. Section 162A, tax paid on goods lying with agents. So this is agents, so goods are available with agents, so tax that is available, paid will be allowed as credit under some conditions. Capital goods lying with agents to be allowed as credit, that also is there with conditions. Branch transfers, so any any amount of input tax credit reversed prior to the appointed date shall not be admissible as credit under branch transfers. Goods sent on approval basis returned on or after the appointed date. So sometimes we send goods on an approval basis, it comes back to us. So it says that, again you see second bullet, that it has to come back within 6 months or is extended by another 2 months. If it doesn't come back within 6 months, tax has to be paid. Tax deduction at source, which is akin to the purchase tax that we have. So if tax has already been deducted under the earlier law, no deduction of tax at source under section 37 shall be made by the director. So if you have already paid TDS under the earlier law, in the new one, it need not be paid. This is a new clause that has got added. A willing seller credit in certain cases. I will skip because I think we don't have too much of time. Interstate supply. Okay, some key messages. We have come to the end of my presentation. So what are the key messages? So please get registered in time. That is one. Update your accounting system and software. You see Tally, SAP, Oracle, all have completed their internal exercise and have now started rolling out their GST compliant software. So generally SMEs are on Tally, but many of them also use SAP and Oracle and other systems. So all of them have their GST compliant softwares. Please get in touch with them and make your software compliant with GST. Calculate your ITC, file correct return within due date, take stock of pending litigations and plan to what to do, review your long-term contracts, and all these, the way I have been, my firm has been doing for our clients, we have developed checklists for all these things. So we call it preparedness assessment and transitional provisions thing. So you should develop checklist for every point, fill the checklist and find out what is the gap, undertake preparedness assessment, list out points that requires updation in the accounting software, because simple things like today you are showing VAT, tomorrow you have to show CGST, SGST, IGST, everything has to change. So the software has to be updated. List out the pending litigations and contractors and suppliers with whom negotiation has to be done. So you see, I will end with one. Yes, please.
One question is that you have given a time period for transaction of goods. There is one good is flowing from my end, which has been dispatched on 25th of the month end, and it is being received. It should be received within 30 days. Is my probability is it can receive up to 25th of the next month. That's my understanding. Another thing is that when we are taking the revision of the prices.
No, sorry, 30 days of the appointed date. So if 25th is your
appointed, first April is my appointed date.
So by 30th April it should reach.
That is for the transaction.
Transit.
But for other goods which have been transited in the month of month of April, 25th of the month, and it can reach by the 25th of the next month. In my tax case ledger, the sales has been reflected on my part on the 10th of the month. And on my part, on the 13th is my to give the acceptance of my part of purchase. But that on that time I am not getting the goods delivered to my part. So it will be carried forward in the next month.
He will show in the next return.
He will get the input date to be carried forward.
Yes.
Another thing is it will be segregated. When goods already supplied but not received, will be anything that what
You see, it will be a check. So the receiver will not tick it. So it will show as a pending item and say below the return. It will go to the next month. In the next month it will tick. So it will go up.
So it will be
and you will get the benefit.
And regarding the revision of the prices, it may go down or it may go up. See, if it is going up, so it's that entire thing has to be paid in cash. Entire difference will be paid in cash. And if it is being revised down, then I will be given back to my...
You will get the ITC.
ITC in cash.
Back. No, not ICT in cash. When he will show it reversed, then your electronic credit ledger will increase.
Already know. Only if it increases, I have to pay it in
cash. Please hold on, we have got one more session. Mr. Puneet Agarwal is here. So if there are no other questions, or we can take questions after his presentation, I will end with just one line. You see, I was in PwC, and in PwC we used to say that if you are early, you are on time. But if you are on time, you are late. So if we have to be on time to catch the transitional provisions, to catch the GST, we have to be early. If we do all these things on time, we are late. Thank you so much.